This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. I want to talk about a specific entry technique on a pullback trade, something you really need to learn. It's my favorite entry. I have 4 different trigger patterns that I look for. When this one shows up, I know I've got a pretty good chance that I'm going to get at least a move in my favor. That's the goal for these. You're trying to get if you can get really good entry, it really increases your odds of success. All right, so let's go ahead and go into this in detail. Now, if you want to learn more about some of these techniques, I would suggest starting with my book. You can click the link in the description to find out more. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, so I've got the chart of Sempra Energy, a utility. Okay, now I got to tell you, I think you guys should get better at trading utilities. They really move. All right, you can get a lot of good trades out of these. What I want to show here is something that's a little bit different. Look at the pattern that developed here. See this big long red bar, a big dive this thing took, and then you undercut all these lows here, and then immediately worked its way back up. So you get this kind of spike and then a move to the upside. An undercut is usually what I call it, and undercut, and then you rally back up. And in this situation, you're actually using the 18 MA as support. Okay, now we're going to get to the entry side in a second, but I wanted to just bring this up because this is a neat little pattern that you want to be on the lookout for. You can be a lot more aggressive with this when it takes place, and I call this an inside pinch because it's happening inside. You see how we're still inside the range, like it hasn't broken out, it hasn't started a trend or anything, and it happens off of, a lot of times it'll happen off of a spike low like that. So if you can be on the lookout for these, you can catch these moves, especially when the pinch is giving it, and you can see daylight between where the pinch is taking place and where the zero line is. Let me clear all this off. You see where this is pinching. This is the pinch right here. And you can see where this is pinching, and there's a lot of room. There's a decent amount of room on a weekly. We're talking about a weekly chart, and we're going to go down to the daily for the trigger. But if you can find these, the ADX doesn't help you in this situation. The only thing the ADX is showing you is that we've started a contraction phase because these lines are starting to come together. Green and red are starting to come together. So that can be helpful from the standpoint that, yeah, I'm going to work my way back up to the zero line. That's all we're looking for in this type of trade. In that situation, you get a nice leg to the upside. All right, so that's what we're trying to find now. That's the higher time frame. When we look at what we're trying to do on the lower time frame, this is what this video was really meant for, and that is we get this move to the upside, and then we get a pullback here, and we move in the zone between the 18 and the 40. Okay, let me actually get in a little bit more detail. I want to go down and show you what I'm talking about. So we get this move to the downside, and we come in the zone here. We don't break the 40. We don't close above the 40. And then we come out, and then we do the same thing again. We come into the zone, and we don't close above the 40, and then we come back out. All right, now we've gotten a crossover signal in the MACD here. All right, but I teach that's not the signal. That we don't want to take that first one. And the reason is that we had overrun. You see how both the MACD and the signal line overran the zero line? When that happens, I'm typically waiting for the second cross or the second trigger. And when we've gone into the zone and we've come out, now all of a sudden I'm looking for a green bar. I'm looking for a green bar that's coming back above the 18 at that point, because I can be a little bit more aggressive because I know they've taken it in the zone. And now, so you got to understand what they're trying to do. If the 18 crosses down below the 40 and then it comes in the zone, it should go to a new low. We should be starting a trend to the downside. But instead, it's actually coming down and testing the low and not breaking it. And now all of a sudden, we're moving to the upside. So I think you can be more aggressive in this type of play and getting it crossing back above the 18. So we can do that. We can actually wait for the 40 if we want, because the reality of the situation is we have a lot more confidence in this trade. At least I do. I've had a lot of time and experience with this, and I think if you sit back and you can wait for a good green bar crossing. I like a big green bar crossing back above the 18. If that doesn't necessarily show up, then you wait for a close above the 40. But you have a lot of confidence that there's going to be the start of a move, because essentially they tried to take it to the downside and couldn't do it. And now you're reversing back up to the upside. And keep in mind, the play is this pinch play off the weekly. We've just improved our timing. Instead of getting in, having it come back down against us, test this low, we're getting in after that, and getting in as this green bar is coming up right as we're getting that big green bar on the weekly. So we get in there and we see follow through right away. So my goal always with trades using 2 time frames is to make sure that I'm improving my timing. All right, meaning if I get in here, I've got to wait all this time before I get paid. All right, you get this move here and you're not getting paid. You're sitting there waiting, and I'm telling you, when you buy something and you're at a loss, you're not a good trader when that's happening. So you want to stay out of that situation as much as you can. So I try and get in it when I think it's really all the pieces are coming together and we're ready to move. So that's one thing. The second thing is reducing your risk. If you buy off the weekly chart without the daily, you got to come down here and put a stop way down here. You don't always have to do that with a daily. Sometimes I will, because the reality of the situation is that the odds of success here, I think, are really increasing if you've come down and tested this low and then you're turning back to the upside. Now, if you notice, you got a MACD crossover on that green bar that crossed the 40. Let me make sure that is the bar, because it could have been the bar after. No, it was that bar. So that bar crossing the 40 was also the second MACD signal coming back to the upside. So you had a couple things working in your favor, but I like to jump the gun sometimes. If I see green bar crossing back above the 18, you notice the 18 was already starting to curl back to the upside on that bar. You got a lot. For me, again, I just think that you can jump the gun. I call it jumping the gun simply because the actual close above the 40 is your typical trigger in this situation. But you can get ahead of the game by 1 bar at least in this particular trade, because you're waiting. You've waited and you've seen that there was a test of this low and it couldn't manufacture a downtrend. And once that happens, the odds of this turning up and this turning up are very, very high. Let's go back to the risk side of the equation one more time. I just want to go into this a little bit more detail. So if you were going to do this off the weekly chart and take this trade as a pinch play, you'd have to risk 375 times 375 times 2 in my world. Okay, the average true range is 375 on the weekly. It's 175 on the daily chart times 2. All right, so to me, that is a pretty significant difference. If I can get in off of this bar here, my stop can go, and it gives you a ballpark estimate. So if I multiply this out, right, I can basically know about, a little over about 350, something like that. And if it's, as long as I'm below this low or underneath the last couple green bars, I can do this. It gives me a little wiggle room, but it's giving you a ballpark estimate. Same thing for this, right? I'm taking 375 times 2. I know I'm got to come a lot more. I got to give it a lot more room, which means I'm going to have a smaller position. Now, that's not necessarily a terrible thing, having a smaller position, but if you can get here and get to that first target. So this is what I love about this entry. This entry technique, so getting $1.75 times 2, we're not talking about a huge move for this stock. You're going to get one leg. You might be in it after 2 days. You could be hitting. It happens a lot for me where I'm actually hitting that first target and taking a quarter off. All right, and raising the stop to a break even. All right, if the entry is really good, then that'll happen a lot. And if you hit that first target quickly, go to a break even, now all of a sudden you're in the driver's seat. You've got 3/4 of your position left. right? You can do that. You can do with it how you like. I typically take at 1R, 2R, and 3R, and then trail the rest and see how far it'll go. Now, in this particular case, because it's had some volatility on the pullback here, you might have been shaken out of it there potentially, but if you did, you probably took 2 or 3 targets before that happened. All right, so I just wanted to cover that in a little bit more detail. There's 2 prongs to using this type of entry. If it comes out of the zone like this and starts to move up, first of all, you've improved your timing because you didn't wait these a couple weeks and have to wait through the test. And the second part of it is that you've reduced your risk. You're not risking 375 times 2, you're using 175 times 2, right? So by doing that and reducing those numbers, it's a lot easier to hit your targets. All right. So anyway, let me know if you have any questions. Thanks.